Bitcoin, please go to moon. Stop going sideways now.
This is
What if
great.
I say we going down to 1K, but Mr. Novogratz say we have Bottomera, Novogratz is bullish. Bottomera, Novogratz is bearish. Novogratz is bullish. Let us go to moon.
Okay, let's get this started, guys. Today we've got a sponsor. Relay app is the easiest way to buy Bitcoin in Europe. Relay app, check them out, why don't you? Let's get started. Today, Tone Vays has been kind enough to join us. Tone, are you bullish or bearish?
Oh man, that's let's start off with the hardest question possible. Wow, I am actually look. I am bullish. I've always said that Bitcoin's gonna find a bottom this summer. The thing is, summer still has about 20 days to go. So I am bullish, but I think it's possible, if not likely, we will have one more critical low in the teens.
Oh, okay. So we'll dip back in. How do you base your analysis of the Bitcoin price action? Do you take a technical look, or are you looking on chain? Because there's a lot of different methodologies people use, and even some confusion, or at least a diversity of views about whether or not the bull market started when on chain started declining in early 2021, perhaps even late 2020, or whether or not you take a more technical view and just look at the price action.
I think a significantly more technical view than an on-chain view. I would say like 85-15, where 85 is technical and 15 is on-chain. But this metric is specific to trying to kind of time the price, which is debatable whether it is a good thing to even try and do in general, versus a dollar cost average approach or a very longer term look, like cycle look, where once we start going down significantly, let's just wait and watch it to start going up. And I think this bear cycle is coming to an end fairly soon, and the halving is, we're more than halfway to the halving now. We're more than halfway to the halving now, and it's time for another bull cycle to begin. Whether that starts tomorrow or whether that starts in 6 months shouldn't make that big of a difference. So I would say for shorter term traders, there's still some timing left to be uncovered. But for the more cyclical, longer term people, now is as good a time as any to dollar cost average.
So let's pick that apart a little bit. If we take one step back, it says on your bio, former Wall Street quant, and you've been in Bitcoin a long time. I don't know exactly when you entered Bitcoin, but certainly much longer than me. So can you give us a little bit of background on how you approach Bitcoin investing? Do you part trade, part long-term hodl, or how do you approach it all? Because you've got an interesting background from a finance perspective, and I wonder whether or not that's changed since you've entered Bitcoin. You're on mute, Tone.
Oh, sorry. So my Wall Street background is actually in building risk models. So I am more of a risk-averse individual, while at the same time, my favorite thing to do in finance was to trade. So I learned to trade in the early 2000s, coming off the dot-com crash. So I was actually taught to trade by the survivors of the dot-com trading world, just as these online brokers came on the scene, like prior to the early 2000s. These are the early days of like E-Trade. Prior to that, it was very hard for the retail investor to trade. I mean, you had to have, deal with these cold calls, like the movie Boiler Room. I mean, that was back in the 80s, early 90s, mid 90s maybe. But in the late 90s, early 2000s, that's where anyone could just start trading. This is very similar to what the crypto space did. So I remember even in college, I wasn't a finance major in undergrad. I was a finance major in grad school. But in undergrad, a couple of my friends that were finance majors, I was a science major. A couple of my friends, they discovered like E-Trade, and this one guy in my dorm like borrowed like $2,000 from his older brother or something, and of course he lost it fairly quickly. And like, what do you do with your last $100? Well, you start trading penny stocks. But even back then, there was some barriers to entry, right? You still had to be 18 years old. If you wanted to make a day trade, you needed to have over $25,000 to be a pattern day trader. Otherwise, you got to hold your position for 3 days. That rule still exists today, even though it's kind of archaic. So there was still some barrier to entry. You had like geographical restriction as well. Like if you're in some weird country, you're not going to be able to trade U.S. stocks. So there were some restrictions, but those restrictions were a lot easier than the restrictions prior to the internet boom and the online brokers. The shitcoin casino basically threw all those rules out the window also. Like no more barrier to entry, no more financial barrier to entry, no more geographical barrier to entry. And that's why you have 13-year-olds trading in crypto and trading pictures of monkeys, thinking that they're going to be worth a lot. Eventually people will grow out of it. So the trading side was always fascinating to me. And then when I learned technical analysis in the in the early to mid 2000s, that was really interesting. And when people get upset, oh, I can't believe you're charging, like $300 to teach people technical analysis. You can get it for free. I'm looking at these people. This shit cost me $8,000 to learn in the mid 2000s. Like prices on education on trading have grossly come down. That's how much it cost me. That's $2,000 in early $2,000, which is probably $8,000 back then. It's probably 25 grand today, at least, with inflation, which is speeding up, by the way. So I was trading on the side, and then I learned options trading, and then I basically did all kinds of trading. So the trading side was always fascinating to me, but I was always too risk averse to eventually quit my job and become a trader. I finally got fed up with my job in the risk modeling space, and I quit that around 2015. I quit it to become a trader. I didn't quit it to become a Bitcoiner. I quit to become a trader, and I was still trading mostly traditional markets, even though I was already pretty familiar with crypto. And back in the 2014 days, I also thought that maybe some of these altcoins could be interesting. But around 2015, I grew out of that disaster, and I've been a Bitcoiner ever since. And I found that Bitcoin, just Bitcoin itself, really fascinating. It really piqued my interest in 2013. I heard about it as far back as 2011. I was always paying attention to this alternative media. I remember Max Kaiser talking about it back in 2011. And but in 2013, with the Cyprus banking confiscation, that's when that really bothered me, because I didn't know that the government can just show up and take your money out of your bank account. And at the time, I was making over $100,000 salary. And I was a big saver. I was never a big splurger. Like I never had a fancy car, never lived in a fancy apartment. I was always saving my money, even like long before this concept of like save every sat. I was saving before Bitcoin, and it's kind of how I was raised, how I grew up as migrating out of a Soviet country. So it was just. Like, it really hit me. Like, what do you mean they can just bail in a bank? Like, what do you mean they can just take your money that you've legally earned and just keep it, like the government, because the bank is in trouble? And that's how, that's how I ended up owning the domain Unconfiscatable. This was back in like 2016 or 17. I picked up that domain. And I didn't know what to do with it until in 2019, we decided to do a Bitcoin conference off of the, because I had the domain, I didn't know what to do with it. So I was like, hey, what if I do a conference only about Bitcoin and name it Unconfiscatable? Because to me, that's the most important property of Bitcoin. But in 2015, when I quit my job, I quit to be a trader, and I just found this Bitcoin stuff interesting. And I started writing articles for Cointelegraph. And I remember, like, even at the time, I was still working when I started writing those articles. And I'm being paid over $100,000 a year, which comes out to, like, I don't know, hundreds of dollars an hour. But then I'm spending my entire Saturday, like 8 hours, writing an article for Cointelegraph and getting paid like $60, right? And for like an entire day's work. And I really enjoyed it because I was doing something that I was really, really enjoying. I just thought that was kind of funny. So I started writing on what I knew. So I started writing about investing and trading, and I related it to Bitcoin. And then after I quit my job, I learned real quick that I don't have money to like actually buy Bitcoin when it's at its lowest of $250 in 2015. I also opened a physical business. I've really diversified when I quit that job. I'm like, okay, one of these 5 things is gonna work out. Like one of them was gonna be like quit everything and start trading, which is a very risky thing to do. Another one was I opened a physical business. It was in New Jersey. In the health and wellness space, physical location. That one hurt a lot. That one was not one of the ones that worked out. That one actually drained a lot of my capital at a time that I needed that capital the most. Again, 2015 at the low price of Bitcoin. I started writing those articles. I started my YouTube, not my YouTube channel. I started my YouTube channel in 2016, but I was becoming very popular on the World Crypto Network, if anyone here remembers that. And I really enjoyed travel. Like I never traveled. Like I find it fascinating when people are like in their 20s and they've already like traveled a bunch of places. Like when I was 26 or 27, I left the United States for the first time. Canada doesn't count. I haven't even been to Mexico yet. Canada doesn't count because you can just drive in there. And I've done that because I went to college upstate New York. And I traveled when I was 10 years old because I had to travel from the Soviet Union to the United States. And to get to the United States, we went through a couple of countries. Those countries were Austria and Italy. So I was in Austria and Italy when I was like 9, 10 years old. And then I didn't leave the country. I didn't get a passport stamp until I was like 26, 27. Like that's super late. And then just a vacation, here and there. I went to Asia and I went to Trinidad for like Carnival. And I'm like, wow, this is awesome. So now I'm in my 30s and I'm like, you know what? I want to travel. So that's how I started public speaking in order to just try to get around the world. So I figured one of these things will work out, either the trading or doing YouTube or writing articles or my physical business. And the one that I really enjoyed the most was traveling and speaking. And to pay for that lifestyle, I had to, teach what I also enjoyed and did well. So I started teaching people how to trade. Even though I did trade for a little while, I did okay. But it's different, trading while you have a steady income coming in versus trading where that is your lifeblood and your only income are 2 very, very different things. I did that for a little while, but the traveling and speaking thing kind of became a lot more interesting and more fun.
So you mentioned that different approach when you don't have the pressure of having to earn an income from your trades. Can you tell us a little bit about how you manage that risk now and whether that changes through bull and bear market cycles?
Yeah, it really changes you as a trader because one of the cardinal rules of trading, you should never trade scared money. You should never enter a trade where you are like praying that this trade doesn't go against you because it could potentially like ruin and alter your life. You should never be in these trades. And when you know you have a steady income coming in, that trade is a lot less likely for you to be in because you know that the worst case scenario, you just keep, hustling away at your actual day job. That concept goes away when you're a full-time trader, and now you're dependent on that for your for your life. And if you haven't practiced enough and you haven't like prepared enough and you don't have proper risk management, it's very, very difficult to succeed, and almost nobody does, because you're trading scared money. People that succeed in trading the best are the ones that have a job that gives them enough free time to just, focus and stay patient on trading. So one of those jobs would be something like, as an example, a fireman. So for example, a fireman would work, 2 to 3 days straight, but then they get 3 to 4 days off straight. So they could sit there, in front of the market for several days during trading hours, and they're relaxed because they know they have a job that pays actually decent money. They're also in a very stressful environment. Your life's always in danger. So you're able to handle the stress of it better. Another profession that transitions really well to trading is a poker player. Again, in order to be a successful poker player, you need to know patience, you need to know odds, you need to know some math, and you're used to doing something for a while until you see that perfect opportunity. So these are the kinds of skill sets that transition to trading super well.
So, with respect to hodling and trading, what percentage would you trade versus hodl?
It's the same whether you're in traditional markets or whether you are in the Bitcoin markets. 10 to 20%, and 20 is on the high side. So generally, there is a 10% rule. Like, don't go to the casino. I mean, in a casino, it's less, right? Like, how much of your net worth are you going to take to Vegas? And I mean, if you say 10%, people are going to call you crazy. Yet somehow, when people put 50% of their money into a trading account, that seems totally normal. The odds are, I would say, the odds are about the same. In a casino, the odds are always against you, unless you really know what you're doing. I would say poker is probably one of the better angles because you are a little bit more in control. But yeah, becoming up, how much of your net worth are you going to put towards professional poker playing versus professional trading when you decide to do that? So the odds are about the same. So there's a 10% rule. Don't throw more than 10% of your net worth into a trading account, and then don't put more than 10% on any single position in a trade. So that may not be a lot of money. If your net worth is $100,000, all you have is $10,000 in a trading account, and now your maximum you can put on any given trade is $1,000. Then on top of that, there is another golden rule, which is don't let that position lose more than 20%. So now you have 100,000 in the bank. You put 10,000 of that in a trading account. You have to put up to $1,000 in any given trade. And if that trade loses 20%, you need to get out. So that means no single trade will lose you more than 2% of your trading account, which is 0.2% of your net worth. So that's kind of how you have to look at it until you really get a handle on it and can prove, well, to your wife or to whoever that you are a profitable trader after at least a year.
So when we're going through market cycle lows like we are at the moment, do you is there merit for someone who does trade to say, you know what, it's not worth trading at these lows. I'm going to go into accumulation mode for the next 12, 18 months, 2 years, because the odds are stacked in my favor if I just hold that for the next, 3, 4, 5 years?
You can. It's definitely a lot easier of a lifestyle, but that's the thing. Like when we say trading, there is a difference between trading and investing, and then within the realm of trading, there's also like time levels. Obviously, if you are trying to make money as a day trader, or you take on positions and you hold them for a few days or a few weeks, whether you're at the bottom or at the top of the market, it shouldn't matter at all. Your skill is to buy low and sell high. Whether that low is 10,000 or whether that low is 55,000, that doesn't matter. So you're just trading the chart.
Just to give people a bit of perspective, I mean, I consider myself a hodler. I put my whole net worth is in Bitcoin, for example. But if we had a blow-off top, a parabolic blow-off top like we did in the last cycle, in the bull market that just passed, I would have certainly sold, because the chances of, having 70, 80%, maybe even 90% drawdown were greatly in my favor. And if my goal, which it is to accumulate more and more Bitcoin. So on that sort of time scale, I probably would have considered a trade, but I don't trade in the same sort of sense that you're describing at the moment. But it's interesting to give people the perspective on risk management and portfolio allocation strategies on much shorter timescales as well.
Yeah, but that's also tricky. Like, I'm going to give you two examples where even that got a lot of people into trouble. So we'll go backwards in time. So yeah, you can say there was a parabolic top back in April of 2021. That was, we went up a lot. We were coming off COVID where we crashed down to 4,000. We consolidated around 10, but then it was a straight shot from 10 to 65. Yeah, we can say that's a parabolic top and you can get out of that. We corrected 50%. I did see that as a topping area. But then within 6 months, we're back at that 65 area. And now I'm super bullish because the way I trade, I don't believe in double tops. When we approach a prior all-time high 6 to 9 months later, I'm as bullish as you can be. And that was clearly not the right call in the market. Now, another example of this being tricky is back in 2017. In 2017, around November, December of 2016, Bitcoin is hovering at $700. Fast forward 1 year, it's now at $7,000. The charts look very toppy. We are exponential. It's the end of like mid-November here. And I called the top. I called like $7,500 top. I'm like, this is it. This is the parabolic top. Get ready for, 50, 60% correction. And we went to 20,000. Now, a lot of people kind of make fun of me for that. But if you think of it, I was wrong by about 2 weeks. The market topped about 2 to 3 weeks later. So while I was only off by a couple of weeks in time, it ended up being, 100% move in those couple of weeks. Now, I went back into the market and I became long again once we broke 8,500. So I was long, but I was long saying, at this point, I don't know where it's going to top because my top was 7.5. Now you just got to ride it and hopefully you don't get, fleeced when it crashes off the crazier parabolic top. And we ended up falling very fast from 20,000 down to 6. It was over several weeks we fell. We bounced from 6 to 12. And then, got stuck there. Then eventually we went all the way down to 3, and it took a little over a year. But even parabolic tops, they're not easy to identify. Around that time, I met Tyler Jenks, who unfortunately has passed away. And he had an amazing system of identifying when a parabolic top ends called Hyperwave. But we haven't had one of those in Bitcoin since that 2017 top.
Yeah, it's really interesting because I spoke to Sven Henrik, Northman trader, yesterday, and he said one of the things that attracted him, he is a trader and he calls himself a technical or technician, market technician. Do you still think that Bitcoin, or did you think Bitcoin traded cleanly, and do you still think that holds now? Because we've had a few sort of myths and legends fall by the wayside regarding Bitcoin. So I'm interested in your thoughts on that.
I do think Bitcoin trades fairly cleanly. It'll be better once the market cap of Bitcoin is higher. The one thing that's tricky in Bitcoin is that Bitcoin's liquidity is spread across many exchanges. That's not how the traditional markets trade. In traditional markets, all liquidity is in one place, whether it's gold, oil, Not all of it, but like 95% of it is in one place. Whether it's gold, oil, or Apple stock, the liquidity is in one place. There is a separation between exchanges and brokers. Brokers is what you select to trade with for speed execution, cost of the trade, analysis tools. You pick a broker, whether it's Fidelity or Interactive Brokers, which is what I use, or E-Trade if it's still around. These things. These are brokers. Exchanges are your New York Stock Exchange, your CME, IC, and like NASDAQ. So Apple stock's on the NASDAQ, Disney stock is on New York Stock Exchange. So that's where all the liquidity sits. So of course, if all the liquidity is in one place, it's a lot harder to move the asset. In the world of Bitcoin, you can move the price of Bitcoin on a single exchange, and other exchanges need to move an arbitrage against it. So we also have these derivative markets that trade with Bitcoin only, not USD spot. And there's so much, market cap, so much value on these derivative exchanges that they end up driving the spot markets. These are signs of an immature asset, but I still think Bitcoin trades fairly cleanly. It does trade in a correlated way to the stock market, but I think that's because it's similar players. And a lot of trading is done by bots. I'm not going to use the word AI. I'm just going to say bots, like someone like codes it up based on certain criteria. And they act on all private assets. And the stock market and Bitcoin are both private assets. Bitcoin is a little more private of an asset than, say, Apple stock, because you could hold Bitcoin in an unconfiscatable way, in an anonymous way, and you actually have possession of it, something you can't really do with Apple stock. So Bitcoin is a little more private, but they're both private assets. And there's this dynamic of people putting their money in private assets versus public assets. Public assets are government bonds. Government bonds, the value, the market cap of government bonds is way higher than the market cap of stocks. That is unfortunate. To me, public is more socialist and private is more capitalist. And right now, with this massive bond sector, the world is more socialist because there's way more money in the public sector. But I do think that government bonds all over the world are going to implode in our lifetime, possibly even by end of this decade. And if that does, and all the capital now sits in private assets, that is a huge win for capitalism versus, socialism or communism. And that's kind of how I see the markets. And Bitcoin and stocks are both capitalistic, entities. They're both like on the capitalist wavelength, and they will move in tandem based on whether people are putting money in public assets versus private assets.
And so I guess I was going to ask you about on-chain as well, because one of the things that I was quite curious, and I guess I admire him for doing that. Willy Woo, when he shut down his newsletter, because he said the signal given by on-chain was not quite as telling and I guess indicative of profitable trades as it once was, and he wanted to shut that down. Do you hold that view as well? Because I think a lot of the analysts that I started listening to, around about 2 years ago, they've also pretty much broadened out to focus so much more on the financial markets rather than merely the on-chain analysis. So interested in your thoughts on on-chain as well regarding signal.
Yeah, I always respected on-chain analysis, and I have huge respect for Willy Woo and the other on-chain analysts, like Will Clement and some of the other guys. But for me, Willy made a great argument as to why on-chain analysis is superior when we first started doing videos together, and that was No other asset has this kind of look, because Bitcoin, everyone makes fun of Bitcoin because of how, the blockchain is so public and we can see every transaction, and it needs to be more like Monero, which is a crazy view of the world. But to me, I was always skeptical on using on-chain analysis to time trades. Always. For me, it's price. It's always price. Like, you can see it in the price. But I'm also pretty analytical. I'm also pretty mathematical. I mean, my degrees are geology, math, and I've taken a bunch of physics. I've taken astronomy. So I'm really into patterns. I'm not a good reader. Like, I don't read I read very slow. My reading comprehension is pretty good, but my reading level is super slow. So, like, I won't get anything done if I have to read things. And also, like, my complete dyslexic speller. But I'm good at patterns. I've always been able to ace my math classes, whether it's geometry, all of them. I almost went to grad school to do number theory. So I am, which thank God I didn't. That shit is hard. And so even when Willy Woolby showed me his on-chain charts, I would always like give him these retarded questions like, well, I see a pattern in that. And then Willie's like, no, look at that. Because I'm still seeing like patterns in these on-chain charts that perhaps weren't like, that's not how they were meant to be used. So for me, I found the on-chain stuff very interesting. And these analysts, again, like Plan B and Willie and some of the others, they really had me convinced at in 2021 that Bitcoin was going to go to this 200,000 and 300,000. Me personally, I initially was saying, I don't know, maybe 95, maybe 105. And then I ended up raising my targets. So that turned out to be not the best call. I'm going to stick to what I know. I'm going to stick to what's worked for me. And I'm looking at the charts right now, and I am a little bit concerned that there is a greater than 50% chance that we're going to dip below that 17.5. It's not a lot greater than 50%, but it is greater. So I am being very cautious right now, and I can, sleep calmly once we get back above, say, 24K.
Yeah, I mean, I was talking to TXMC. I'm not sure if you know who he is, but he's a really good analyst, actually. And he sort of opened my eyes to the fact that a lot of this Bitcoin trading volume is not actually happening on chain, particularly since the institutions have entered the space to facilitate all kinds of trading services for their clients regarding Bitcoin. And so we don't get to see any of that action anymore. They're in these dark pools of institutional funds that trade on their own systems and they never move. And so to us, it appears as though more and more percentage of the Bitcoin supply is not actually moving. But in actual fact, it could be moving. We just don't see it. And so as soon as he sort of opened my eyes to that, I said, holy shit, then that pretty much renders most of this stuff to be much less effective than it maybe once was. So that was an eye opener. I was pretty stunned by that, actually. And maybe it's just a little more than something that's a conversational topic of interest rather than anything that indicates what's happening in the market anymore. I mean, perhaps on-chain analysts would have more to add to that. Maybe I'm being a bit hasty in dismissing on-chain, but I think more and more people are starting to realize that it's not quite the signal that it was. When you have a look at the Bitcoin price chart right now, do you see it falling to 10,000 like a lot of people are suggesting right now?
I think 10,000 is on the super low side. But again, we always have to talk about in probabilities and in time. Is it possible that Bitcoin can fall into single digits? Like under 10,000. Not single digits, but I guess 4 digits. It's possible, but how much time will it spend there? And I think that if Bitcoin does fall below 10,000, it's going to be kind of like it fell below 4,000 on the COVID crash. It was there for a few hours, right? So I think that's a low that's almost impossible to time unless you set your limit order now for like $9,800 and you leave it there and hope you get lucky because and hope your exchange will be working when that happens, right? Because for some magical reason, they all tend to go down when there's a perfect opportunity to buy at a low price. So it's possible, but it's very unlikely. And even if it's possible that it goes to 10,000 or lower, it's not going to spend any kind of time there where if you're not pre-prepared to buy it, you're not going to be able to buy it. So we got to talk about realistic scenarios. And in realistic scenarios, I think something like 14,000 is more likely. And it can, give you maybe a 24-hour opportunity to buy it below 14,000. And then I would give it a chance of going to 14,000. I don't know, something like 30%, 40%. It's still fairly high. I think it can happen. Right now, I'm giving it, let's say, a 55% probability we're going to dip below 17.5. And if we do dip below 17.5, I would expect us to dip below 16 at that point, because just like I don't believe in double tops, I don't believe in double bottoms. I just don't believe double bottoms reverse the market, unless that double bottom is at a really low price. Like a really low price. Like, for example,
we had a double bottom in 2015, though.
We did, sort of. That one was interesting. That one was two separate flash crashes. So in 2015, they were a little bit different. We did have a bit of it, but that was like an absolute bottom price, right? There wasn't much further it could go. I mean, the price of Bitcoin fell from 1,300 down to like 150. They were somewhat different because different exchanges took them down. So in January of 2015, I think Bitfinex is the one that fell to like 140, while other exchanges stayed near 200. And then in August of that year, Bitstamp fell to like 150, while other exchanges stayed near 200. So they were, it looks like a double bottom, but in reality, it was a little bit trickier than that. So it's possible. Look, we just had a double top. So it is possible for that, but the odds of that are just unlikely. Just the price bottoming at approximately the same price twice is actually unlikely. So I take that view. It happens more often than it should, but it's still unlikely. So in my view, if we fall to like under 18, we're probably going under 17. Like once we fall under 18, I'm going to give it like an 80% chance we're going under 16. May not be much, maybe like, 15.8. But that's kind of how I view it in probabilities. And we can still avoid all this. We can still go up to 24,000. And if we break the highs of mid-August, if we break the $25,000 high of mid-August, I'm going to give the probability that we go below 17.5 at some point in the future, like 10%. Like I'm going to be super bullish and very convinced that the low is in. So that's kind of my view on the price situation. Right now, I recommend holding cash or just dollar cost averaging into the future. And be prepared, be mentally prepared that yes, we can fall below 16.
So I'm kind of skeptical about fractals, but they always make for such interesting graphics to represent. And I've seen recently a lot of people who are playing around with charts and posting on Twitter, suggesting a recovery or a bottom and a recovery in a shape that kind of replicates what we saw in November 2018. Are you familiar with what I'm talking about? Just off the top of your head.
Yeah.
Yeah. What do you think of that? Do you think that's a viable sort of shape of recovery, or do you think the chances are actually we will go much lower?
I mean, it is possible. I mean, we crashed down to 3,000 and then we went up a little bit and then we made a slightly higher high. We're sitting at that slightly higher high. And that's what I mean. Like, even back then, even at that time, I expected us to break that 3,000. We were hugging that moving average. I eventually became a bull. But in that environment, the
Was
low
that when
came
that
in.
song came out? You were
Yeah.
calling for 1,300.
Well,
Okay.
technically, when that song came out, the price of Bitcoin was actually $6,500 to $7,000 when
No.
that song came out. And like a month after that song, Bitcoin crashed over 50%. So technically, I was more right when that song came out than Novogratz was. But no, it did not make it all the way down to 1,300, which was my worst case scenario. That's the other thing people don't really follow and read, that my 1,300 target was my worst case scenario. That wasn't my highest probabilistic scenario.
No, I
My
only
highest,
raised it as a joke. I'm not holding you
yeah.
to account to a call you made 7 years ago. That's all
Yeah,
right.
no. I mean, like, look, I live up to it. Just try to like explain to people how my thinking was at the time, where 1,300 was my worst case scenario. And you have to be ready for that worst case scenario, whether financially or mentally. You have to be ready for it.
Okay, so let's
My
talk about that. How do you get ready for a price fall? What are you doing? Are you accumulating cash at the moment more than usual?
No, unfortunately, this global depression has destroyed my business models. That this has been one of the toughest years for me because my businesses kind of depend on people paying for my products and services. It's mostly services than products. So how does Tone make money? I organize conferences and events. I also have those educational trading webinars. I sell an indicator called MRI to help people time the market. And in this environment, people don't want to spend money, especially Bitcoin. So my income stream has been completely crushed this year. No one is really spending. So meanwhile, I still want to keep, keeping these businesses alive. I'll probably focus on my conferences some more. Hopefully, people will buy more tickets to the events. But it's been a rough year. I'm definitely in the red for the year. My option is to just go back to trading. It's hard. It's hard being a public person and trade. It's very challenging. Everyone always expects something for nothing, right? Like when you are a profitable trader, you're focused on trading. You don't like stop at 10 a.m. Or 11 a.m. Eastern time in the middle of the stock market to do a spaces with Bitcoin Archive, right? Like, I mean, this is great. I'm doing it, right? But if I do shut down the businesses and I go back to trading and I know I can make money in trading because I've done it before, there's not going to be these like, oh, cafe Bitcoin spaces every day from 10 to noon, right? It's going to be, no, that's stock market hours. I'm working. You have to be in that zone. And people think that, oh, they deserve to know your secrets of trading. Well, I have my workshops, I have my webinars. Everything I know, I'm teaching you, but now you have to put it to use.
I want to ask you
Like,
something. Sorry if I cut you off there, but you raised an interesting point about being a public person and charging for your services or for your knowledge, because there's this interesting tendency that I find really curious, given the libertarian, capitalistic, political hues of Bitcoin Twitter. The moment you suddenly start charging people money for something, or you might accept, heaven forbid, a sponsorship, even from a legitimate service, they get all angsty about it as if, the devil has entered the conversation. What's going on with that?
right. And in reality, right, like libertarians, and I've been in that community. I don't know, have you watched the show The Anarchists on HBO? Who here has seen it? Like,
No, I
just
haven't
like,
seen it. Haven't seen it, no.
oh, you gotta go watch it. The Anarchists on HBO, and I've been going up to that Pork Fest, the Libertarian Freedom Festival. Dude, it's like Waterworld out there, man. Like, guys will bring a bench and dumbbells, and they'll charge you $5 to use it. Like there's nothing free there, man. Like they won't even sell you coffee for under $5. And this is the libertarian community. It's literally like Waterworld. So, but yeah, it is crazy. Like I remember when the Bitcoin community had like one ape shit over Natalie Brunel's
Yeah,
Bitcoin education
I
course
didn't
that she did
understand that.
with Pompliano was like $800. And she's like, I don't understand. She's like, I made almost no money on this. It took me so much effort. It wasn't easy. I had to learn this stuff. I decided to make a professional course about it. And everyone just like crushed her. And I'm like, oh my God. And like it is your knowledge and it is your work. And look, I know these things kind of max themselves out. And my voice in Bitcoin is becoming pretty repetitive. And that's another thing with public people. Before you become this like public, I hate calling myself an expert, right? But let's go with that term. Before you become a public expert at something, you had to spend the time to learn it. And you got to have skills and being able to teach it. Like Andreas is pretty good at this. And I was a teacher. Like I was a college professor for a little bit before I got into Wall Street as well. And you have to learn it yourself, and you have to have the skills of teaching it. And once you start becoming super popular in teaching what you know, when do you find the time to keep up with additional knowledge? It's so difficult. And this is why when people go to these, old guys, old gurus, and start asking them questions like, what the hell is Warren Buffett going to know about Bitcoin? Like, when is he going to take the time? When is he going to take a 6-month sabbatical to study it? He's not, right? Because every second of every day, people are asking him about his expertise. So and the more popular you become, the more in demand you become for your expertise, the more out of touch you get with your own field of expertise.
That's really interesting because I guess there's a cost to being so available and repeating your knowledge. So rather than just putting it out there once and then giving people an avenue to access it in a paid way as a subscription or paid service, and then allocating some time for you to continue your knowledge acquisition and study. I guess it's always a balance between that. I mean, my concern, I'm not a public figure, but I'm considering some options down the track. My thing is, how do I deal with being recognized and that sort of you're giving up part of your privacy, and 1 million followers on Twitter is nothing to sort of sneeze at, and I don't know how I'm going to handle that, and I'm just giving that quite a lot of thought. If I start doing video podcasts and interviews and that sort of thing, and suddenly your daily bubble is burst by someone recognizing you perfectly, good-willed and everything, but it's still kind of, oh, something's changing in my life. How do I deal with that? So I've just been pondering that the last couple of months, actually. So any advice you can give me, I'd be more than receptive to hearing it.
Yeah, well, I'm sure your life is very, very busy, right? I mean, people messaging you all the time, people pretending to be you, scamming other people all the time. Look, you're already dealing with 90% of the problems that come with being a public figure. Showing your face at this point will not change much for you. It
you don't think so?
won't. I don't think so.
Okay.
I don't think it's going to change that much.
Yeah, that's the thing.
You're already there.
Yeah, that's because what I feel like, I come on Twitter on my terms and I leave it and then it's gone. I have control of that. I feel like if I put my public image out there, because I live my day outside, I do my work in coffee shops. I mean, I'm at home right now, but I walk around basically, just thinking to myself, and to have that bubble punctured, I'm concerned about how I'm going to react, and I don't want to give the other person a bad impression. I also care about that as well. I don't want to react in a negative way to someone who's just being really friendly and nice either. So I don't know, just these things to manage, and I guess the OPSEC aspect of it too. We haven't mentioned that, and So yeah, that's
The OPSEC of having your real name out there, does create additional concerns. And also, it depends on your personality. Like, I like being around people. I think it's where COVID really did a number on me. I like being around people. Oh, D just came in. D was playing cards with me. I like hosting poker games at these events. I see a bunch of other names here. Paul Storts. So you at Bit Black Boom as well. Brian, I don't think you made it out there. See Arena in the audience as well. Well, you're usually on the other side of the world. I don't think you were over in the U.S. But yeah, it's a little bit different, but it also depends on your personality. Like, some people are more introverts, some people are more extroverts. Like, I like being around people. If I tweet out I'm going to be grabbing a drink at this bar, I want like the maximum number of people to just show up and say hi, right? Because I really enjoy that. If you enjoy that, then yeah, it's probably worth it. If you don't really want 100 random strangers showing up and saying hi to you, and you don't think you can handle that, then being public is probably not for you.
So you say that now, but you've had how many years to get used to it? 7 or 8 years?
Well, I was always like even back in university, like I said, like I can't read a novel worth a damn, but I had no problem getting up in front of a class and speaking in public, right? I was a high school teacher for a year. I was a college professor for about a year and a half. So I don't have a problem in standing in front of the room and enjoying the spotlight. I actually loved it. My first public speaking, I was on a panel called altcoin versus Bitcoin. That was my very first panel at a conference in Hong Kong. The first conference I ever spoke at. First time I went to Hong Kong. Let's not talk about which side I was defending back in 2014. But so like I super enjoyed it. I thought I loved it. Right. So for me, being public's important. Like either sometimes you want to like get away and take a break, and I might do that. But also, family. If you want to start a family, maybe it's better to eventually be private. But yeah, no, but I love meeting people. I used to love hosting like parties and barbecues, and I still love hosting poker games. I love it. So I like when I threaten that I'm gonna stop, and I'm just gonna, one day Tone Vays Twitter handle is gonna disappear, probably banned by Twitter first, but the Twitter handle is going to disappear. The YouTube channel is going to stop. I'm just going to, go back to an ordinary life and just trade, and no one's going to find me. And my friends laugh at me, and like they know it's like, Toad, you're never doing that. Like because they know my personality. They're like, nope, stop bullshitting. You're never doing that.
Yeah, I mean, just to declare my hand, of all the tests I've ever done on personality, I measure as an extreme extrovert. So it's not that attention is a problem for me, but I sort of guard my my circle and my company quite closely. It's that unfettered access that becomes something that's beyond your control, that I'm quite sort of very protective of. And like I said, I don't want to be a prick to someone who's just being nice, you know what I mean? And they've seen me and they've supported me online, and then suddenly they just catch you in that moment where you're in your own thoughts and you might not react in a way that's appropriate either. Hey, originally I approached you because all this ETH stuff is going on, and as much as some people call me a shitcoiner, I've got all my money in Bitcoin. I get paid in Bitcoin. I live on the Bitcoin standard. I've never owned any other alts. And I don't even look into what other alts are doing. I have no idea what they're doing because I'm totally consumed by Bitcoin. And so when I saw all this stuff happening with Ethereum and their merge, and there's so much uncertainty about it, especially after what's his name? Checkmate, he posted his video and thread, and there's all this discussion ensued after that, and quite a lot of controversy. I reached out to you because I thought, this would be a really good time not to really shit on ETH, because I'm not interested in that. I know some people define their love and commitment to Bitcoin by how much they shit on other things. I have no interest in that. I'm interested in Bitcoin, and I want to talk about Bitcoin. So I wanted to take this opportunity, looking at what's happening on the other side of the fence, to discuss some of the properties of Bitcoin, and particularly the design properties as well, and use that as an opportunity. Because one of the things that prevented me from investing in Bitcoin much earlier on was the uncertainty around it. So in the initial days, who knew if it was going to survive? Sure, I understood the concept. And then I sort of dismissed that up until the 2017 bull market. When I saw that we had another bull market in Bitcoin, I said to myself, if this survives this crash that's going to come, I'm not going to miss out on the next cycle. And that's effectively when I invested. So when we look at something like Ethereum now going through their merge, what does that tell you about Bitcoin in terms of its strengths? What do you look at Bitcoin and go, thank God we're not going through any of that stuff right now?
Right. So what you just said about like the reasons why you didn't invest in Bitcoin early, I never touched Ethereum from day one because I recognized super early what Ethereum was, and it wasn't interesting to me because I never thought it could be decentralized. And my interest was decentralization with Bitcoin. And you can't have infinite number of digital scarcities. You either have digital scarcity or you don't. And all these other tokens is just unscalable, unsecure inflation on top of Bitcoin. Like that's all they are. And Ethereum, when it came out, and I was seen as a big hater of Ethereum, I have multiple podcasts explaining the problems of Ethereum. To me, when Ethereum came out, it had 4 critical problems. One of them was security laws. I always felt that Ethereum was an unlicensed, unregistered security. The SEC doesn't seem to want to do anything about it, but that's fine. So that was one issue that I didn't want to get involved in, like the regulators are going to come and get them. They did not. They let it go. Now, the other problem was technological. Like, I didn't think Ethereum could ever scale, especially with what they were building. Ethereum still has a huge scaling problem. You can't run a node. Good luck running a node. Now, Ethereum has 2 additional problems. One of them was economic. The economic problem is when you build a platform for a service, and Ethereum is a platform for a service, that service is executing smart contracts. Your service should not have to force its users to use the currency of the platform, right? Like we're not forced to use Amazon stock to buy from Amazon. We're not forced to use Netflix stock to purchase a Netflix subscription. Like these services, they and they have a lot of competition. Like they shouldn't be forced to use their own currency. So that's a whole economic issue. And then finally, this notion that your smart contract needs to be decentralized to begin with is crazy. Everything on these platforms is totally centralized. They're decentralized enough that a hacker can like steal the crypto, but they're not decentralized enough to prevent a coordinated government attack, basically. And Ethereum always knew that mining was going to be a big problem. Mining is the last element of Ethereum that is actually decentralized. So I have this presentation explaining decentralization. And to me, decentralization is a triangle with 3 equal parts. So it's mining, coding, and running a node. Those are the 3 parts of a decentralization triangle. Now, if we break that from 100% perspective, well, I would give it 33%, 33%, and 34%. So personally, I value running a node more important than the other 2, but not by much. 34 versus 33, 33. The problem with Ethereum is that we know we know that their coding is fairly centralized. What the Ethereum Foundation wants, the Ethereum Foundation gets. You can't run a node. Like an average person just can't run a node. And there is a 1% chance you'll be able to maintain your node without it crashing on a weekly basis. It's almost impossible. So no one runs nodes in Ethereum. No one. There at one point, Ethereum had like 7 nodes, and they had to like find a way to get people to run nodes. It was a complete centralization of node running. That's where you get to validate your own transactions, and you get to maintain the history of the whole chain. And mining, the one aspect of Ethereum that is actually capitalistic and decentralized, they're taking it out. And by removing mining, you're putting control of Ethereum in the hands of the Ethereum token holders, which is insane, which is literally the model that the humans lived under for thousands of years. We have always lived under a proof of stake system. The more you have at stake, this is what a king is, right? Like the king has the most at stake at their country. They're usually the richest person. They rule the whole thing. They have to rule carefully, or the pitchfork mob is going to come and take all their wealth. So that's literally the system that Ethereum is going back to. They're going back to how we've always lived in a proof of stake world. I don't understand. It's insanity. Proof of work was the innovation. That is what Satoshi built. He built proof of work. Everything that he did was because he solved proof of work and he created it. And Ethereum going to proof of stake just sounds so backwards to me. It's crazy. So because of all these things, I really don't care to pay attention to the details of how the merge is going to go. I've always said, going back to my World Crypto Network podcast of 2015 and early 16, back when this rumor of Ethereum is going to move to proof of stake started, I said Ethereum is going to fork. There's going to be 2 Ethereums. There's going to be an Ethereum work chain and an Ethereum stake chain. And all of these projects that built on top of Ethereum will need to decide, do they stay on a truly decentralized-ish Ethereum? Because once the Ethereum Foundation is gone, they go to proof of stake. Mining is left as a decentralized platform. The Ethereum work chain will actually be decentralized. You're still not going to be able to run a node. That's still a disaster. You have no idea who's going to code it, but it's not going to be the Ethereum Foundation. And then mining would continue and probably be more capitalistic and more decentralized. That is the decentralized Ethereum. Now, I think that decentralized Ethereum is totally useless. No one's going to use it. It's going to die. One of the advantages of using Ethereum is because it's centralized, not because it's decentralized. So, but you have a chance, you have an experiment to try a decentralized Ethereum once it forks. But then the forked side, the original, the Vitalik side of the stake chain of Ethereum is going to do everything in its power to try and squash and destroy their biggest competitor, which is the Ethereum work chain. I don't know exactly what their plan is, but they're scheming something. And maybe they'll have one of the miners on their side. Maybe they'll bribe one of the miners with, a bunch of Ethereum tokens that they're holding in the Ethereum Foundation. I don't know what their plans are. I don't know. But I'm pretty confident this is a disaster in the making. And I don't pay too much attention to it. Just like you, I focus on Bitcoin. All my research on Ethereum was done a while ago, and it hasn't changed. And I know I sound like that dinosaur I mentioned earlier, that once you become, this public personality and everyone is asking you for your expertise, you don't have time to learn new stuff. But every time I go back and attempt to read a white paper or attempt to do a deep dive on a website that is promoting some kind of new blockchain project, it's always worse than I expected it. I'll do my 10 seconds of research and I'm like, oh, this is crap because of so-and-so and so-and-so. And then I get schooled, no, you have to read into it. You don't understand. You can't just look at it for 10 minutes. And I'm like, okay, fine. I'll give it a few hours and I'll look at it. It's always worse. My initial speculation of how bad it is, there's always a fraction of how actually bad it is once I start looking into it. So I just kind of stopped looking into it.
You mentioned a few interesting things, decentralization and scale. So one is to do with the design, the second about how it actually becomes a ubiquitous global system as well. And so there were decisions made with respect to Bitcoin to maintain its decentralization and to optimize for that, and scaling would take place on layers. Can you comment on why that was the right decision for Bitcoin? Oh, you're muted, Tone.
Sorry. That's a very easy answer. And it took a little while to get to this answer. I mean, some core developers knew this answer from the start, but others had to, do a little bit of research and come to that conclusion. And the conclusion is the most important part of Bitcoin is an average person's ability to run a node. The moment you start making it harder to run a node, the moment you start making it more expensive to run a node, your decentralization will start to fail. And Bitcoin is nothing without decentralization. So for those here that are into Ethereum, that have a project on top of Ethereum, that think that Bitcoin is archaic, go and build an Ethereum node and go and build a Bitcoin node. It costs nothing. It costs a few days of time, costs a little bit of learning. You may have to, dig up an old laptop. Well, in Bitcoin, you can use an old laptop. All you need is maybe 500 gigs, ideally a terabyte of storage, so you don't have to worry about it for like another 5 years. And go ahead and try it. Build a Bitcoin node and route all your incoming transactions through your Bitcoin node. And then try the same thing with Ethereum. And you will learn real quick why Bitcoin is decentralized and why Ethereum is not. And the goal to keep it that way is to keep it as easy to run a node as possible. And by building all this stuff, fast, cheap transactions, privacy, second layers for smart contracts, all that stuff needs to be built on top of Bitcoin, because the more you build into Bitcoin, the more data it is. We don't have unlimited data storage, okay? As much as we all love YouTube, and it feels like unlimited data storage of your videos, look what they're doing with it. They're taking your data, they're advertising on your channel, whether you like it or not. There's no such thing as free unlimited data storage. And people think that a blockchain is free unlimited data storage. It's not. That is why Bitcoin's blocks every 10 minutes is 1 megabyte. And some developers want to make it even smaller, because in 40 years, you need to be able to run a node with $100 investment, because that's what's going to keep it decentralized and, free for people to use. That was a weird statement, but, everyone should have the opportunity to use Bitcoin, and Bitcoin needs to stay decentralized to allow everyone to be able to use it. So that's why everything needs to be built on second layers.
And so that, I guess, building out the scale on layers, why is that a good engineering decision?
Right, because it allows it removes the most important critical element of Bitcoin away from being cluttered with data, because data storage is not free and it's not unlimited. You need to keep as little data on chain as possible. That will allow Bitcoin to stay decentralized into next century. None of these other projects, well, they're not decentralized to begin with, but they will never achieve this, because, like, at the end of the day, one guy will be responsible for all of Ethereum's data, because it's just too much data to store. Just like Amazon is responsible as a company for all of the AWS's data.
And so I guess when I look at what they've done in Ethereum, tried to build it all into one blockchain, and what Bitcoin has done in choosing a layered option for scaling, not only does that make it modular. So, for example, if the Lightning Network failed, you could have competing networks to the Lightning Network. It's not necessary that we just have one, right? I guess the point I want to lead to is, unlike you, where you said DeFi is not interesting to you, the concept of decentralized finance is absolutely fascinating to me. But I don't see anything it's all garbage at the moment. I don't think it's investable at all. So the question I have is, when is all that stuff going to come to Bitcoin, and what's stopping it from happening now?
Those are great questions. So to me, decentralized finance is Bitcoin, because that's the only thing that can claim the decentralization part of DeFi.
So I mean the services that can then be built upon what is ultimately, global monetary networks.
So pretty much almost everything that is built on top of like Ethereum and stuff, pretty much most of that can be built on top of Bitcoin. It's just a lot harder to build. Because less people are building it. The reason is, like, let's back up for an example, right? These are monkey NFTs. Okay, so can you build NFTs on top of Bitcoin layer 2s like Liquid sidechain or RGB sidechain? I think there's another one. Yes, you can, but no one really does. And the reason is because who's going to buy your monkey NFT on top of Bitcoin? Almost no one. That's because when you build your monkey NFT on top of Ethereum, your pool of people and suckers who are willing to pay hundreds of thousands of dollars for a JPEG, they're Ethereum people. They are people that are already committed to investing in anything and everything, and they can be convinced to spend that money. It is very hard to separate a Bitcoiner from his Bitcoin. So when you build that monkey NFT on top of Bitcoin, your pool of investors into it is not the Ethereum community. It's the Bitcoin community. And good luck selling them on a JPEG NFT. It's a real challenge. Like your pool of customers is very, very different when you build on top of Bitcoin. You actually need a viable product. And that is why very few things are being built on top of Bitcoin, because they know that they have to, sell a viable product. And none of these things have a viable product. Like all of this stuff in the DeFi world, in the Ethereum world, it is only as successful as the price of the token. They launch the token first. The price of the token goes up. The value of the token maintains the company. And once the price of the token crashes, the company dies. This is not how traditional world works. In a traditional world,
can I just unpack that to make sure I'm understanding what you said? Because at first it seemed like you were applying some kind of circular logic, but when you add the value of the token, you're saying their interest in Ethereum is driven by the increasing value of the token. Thus, that speculative nature of the people who use Ethereum are much more amenable to speculate also on other garbage as well. Is that what you're saying?
Yes, but I was more saying about the tokens being built on top of Ethereum. So
I see.
Ethereum's business model is to create more Ethereum. Is to create replicas of Ethereum. That's their business model, right? Like, we built a platform on the back of our token. Then, like, the value of the token, like, Ethereum fails if the value of the token goes to zero, right? Because Ethereum doesn't actually make any money. So they don't actually have clients, they don't have customers. So the whole Ethereum model fails if the value of Ethereum goes to zero. So it becomes this house of cards. Now you build a token on top of Ethereum. Let's randomly call it Celsius, right? So you build a cell token, right? And you launch a cell token, and now you got to come up with some kind of an idea, some kind of a product. And that product will only be successful as long as the value of the cell token keeps rising. It's basically Ponzi schemes. Now, Celsius, the company, had no viable product. And they were able to maintain the illusion that they have a real business, because the value of the token that they created out of thin air was very valuable. That's why we have 2 billion in reserves. Show me another company that has 2 billion in reserves. But that 2 billion was in their own token. And once the value of that token goes to zero, like it did, boom, they have no more company, right? So in the traditional world, the stock of your company reflects, there's some speculation there, but it also reflects a viable product. Even a company like a Tesla, right, which everyone says makes no money, but they certainly make a car. I don't have one, but I've driven one. I've sat in one, right? They have a product. Tesla has customers. Tesla has a product that they build. And a lot of people speculate that every single person in the world is going to own a Tesla. And that's why their stock is worth so much. Most companies prior to the crypto world, you have to have a viable product that brings in revenue. It may not bring profit yet, but it certainly brings in actual revenue. That allows you to go public with a stock, with an equity, with a security. And the value of that security is reflected based on your revenue of a company. None of these companies in the crypto space have actual revenue. They don't have customers. They don't have clients. They create a token. The token goes up in value. The token gives them a bunch of money. They now build some kind of a product that people don't really need, but they'll use it because they're speculating on the token. But once, the speculation on that token ends, there's no underlying viable product. And there's 100 other blockchains that do exactly the same thing. Okay? So they're going to move on to the latest and greatest hype. This is why you move from Solana to Cardano to, whatever is next. Okay? So the business model is completely upside down. And like I said, they don't really have a viable product. Everything depends on the token. Now, Bitcoin is a little bit different. Bitcoin has a viable product, and that product is Bitcoin itself, and it's a new form of money. And it has unique properties like unconfiscatability and censorship resistance. And as long as people need these properties, Bitcoin price will keep going up. Bitcoin price is a reflection of the need for these two properties. And it's debatable whether anything in the Ethereum side of the world is actually needed. And they have so many competitors that you don't know which one is going to succeed if one of them succeeds. Not to mention Bitcoin itself is a competitor with its second layer solutions. Liquid can do everything Ethereum can do. Lightning can do everything that, like let's say Litecoin promised to do. Liquid sidechain also does everything Monero promises to do. With privacy.
You know why I'm concerned about those statements, though? When the iPhone came out, Steve Ballmer dismissed it, and he was right to say our phone can do this, can do this, can do this. Every feature he ticked off, he said, we already do this. That's fine. You can say we do this already, but why aren't customers flocking to it? Like there is a problem of adoption to all of those things that you just mentioned that just seem really slow off the blocks, or maybe not easy to use. Why aren't customers moving to them?
Bitcoin's a couple of challenges. First of all, Bitcoin doesn't have a marketing department. In fact, Bitcoin gets demonized in the open world more than it gets supported. Also, Bitcoin is revolutionizing many things at once. It is also spreading around the world, literally around the world. It's just going to be slow to adopt. It's simply the way it is. But with every year, we get closer and closer to that S curve. I don't know if you see one of my favorite old videos. It was, I don't even know if it's still on YouTube. It was called, it was by James D'Angelo. I don't know if anyone here remembers that name, if they've been in the space long enough. Mr. Hodel certainly does. I see him in the audience. James D'Angelo's, I think it was like 101 Blackboard or something, and he had this video about the S curve, where Like adoption is just slow, 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 and then it goes exponential. And I think we're going to hit that exponential trend sometime this decade. And you don't want that exponential adoption earlier. Like imagine if Bitcoin was starting to get exponentially adopted in 2017. We already had, $20, $30 transactions back then due to like spam and legitimate usage. Imagine like if 1 billion people tried to get on Bitcoin. We're still not ready. I don't think the Lightning Network is ready for 1 billion people yet. Maybe in a year or two.
It's
Right.
not, but
So-
it's growing fast. That's for sure. It's really impressed me when I used it in El Salvador.
And also, people think that, Bitcoin is too slow. It's already old tech. It's already 12 years old. People don't understand that when it comes to money, it's stability is the name of the game. Confidence is the name of the game. Like the fact that Bitcoin doesn't change on a dime is what makes it more stable, is what gives people more confidence that Bitcoin isn't going anywhere. Like if there ever was a major problem in Bitcoin, let's say one of the fears right now is that there's a coordinated effort to like arrest every Bitcoin developer, right, that they know about. So all of a sudden, boom, Bitcoin development stops. I think that's going to give it even more okay, great. Now Bitcoin code won't change at all. And it's working the way it's working, right? Like, so it's really hard to take Bitcoin down.
Yeah, that's one of the things that gives me a great deal of peace of mind, actually, is that we haven't got any existential challenges this cycle. That was the block wars. That was the last time Bitcoin had an existential crisis. And I wasn't around. I wasn't invested back then. So this time has been relatively smooth sailing compared to that, which is probably why in this bear market, everyone's trying to eat each other's heads off. So, interesting. You mentioned the S curve. Are you still of the view that adoption will take an S curve shape, or do you think it's just going to sort of gradually increase over time?
I do think there will be an S curve adoption, but I think it's going to happen at the end of this decade.
Or what do you think will precipitate that? Because we're going through a crisis now. I don't know how that's going to get any better, to be honest. It's the first time I really don't see a clear way out of a situation policy-wise. So I'd be interested, what do you think is going to precipitate the S-curve adoption rate? And why don't you think it would happen sooner then?
I think my two biggest catalysts is the breakup of the European Union and their common currency, and the potential, breakup of the United States into multiple countries. So I think those two catalysts will create the S curve, like those existential candidates, and I think both of those things are very likely by the end of the decade.
Wow, that's a lot of geopolitical uncertainty at the same time, essentially predicting the end of the so-called West. I can certainly see the circumstances under which the monetary union in Europe might come under pressure. It's already coming under pressure, given the North-South divide and also some surreptitious Russian alliances as well emerging in Germany now, with a couple of politicians being accused of potentially being spies, or at least having sympathies in their political stances. So that's going to be interesting to see how that plays out. The United States, I think the differences over there are much more superficial than in Europe. Why would you think that they would be on the United States is on course for I guess what's the word?
I just think the divide between left and right in the U.S. is too strong. Europe is very different. I mean, Europe already has their borders. They're a little bit more. The borders in Europe are more language and culture based. Italy versus Germany. The borders in the U.S. are not language based at all. Everyone speaks English. Their culture in the U.S. is the U.S. has less, I guess, traditions than something like than European countries, because European countries are significantly older than what the United States has. But this political divide between left and right is huge, and it's getting exponentially worse since the moment Trump got elected. Like, I think the Trump election just set off this exponential, this yo-yo, where the left got very aggressive against the right with Trump. Now the right is getting very aggressive against the left with Biden. But the right can't do much right now because the left also controls Congress at the moment. But if that election flips in November and the right now controls Congress, it becomes very different. Now it becomes, and it's just, and this, it's like again, it's like a yo-yo, or it's like that just gets worse and worse and worse. So now that we just had a president raided, Trump got raided by the FBI. Once the Republicans and the right takes control of the government, it's possible they might get arrested. Now, what happens if politics flips again back to the Democrats? They're going to be even more aggressive towards Republicans. And we're witnessing this trend exponentially get aggressive between each other. I don't think this is going to be a violent split like in the 1800s. I think this is going to be more of a peaceful one. But I can certainly see Florida saying, screw it. We're just going to be our own country. We can handle it. Probably wouldn't be smart. They're better off aligning with Texas and getting a bunch of states in between. Texas is very angry because of what's happening with the Mexican border. Florida has been pretty, they've been basically putting in policies complete opposite of what Washington wants. And I'm witnessing this divide just going exponential. And there's a long way between now and 2030, right? I mean, look how far we've gotten in the last 2 years. And I don't see us, remedying that. I only see it exponentially speeding up.
Yeah, so there are no easy policy choices. The interesting and ironic thing that you mentioned in the two continents is that there are a lot of cultural differences and stark cultural differences in Europe, but it's probably going to be economic pressures that lead to an outcome that you've sort of alluded to. And in the United States, there's much more cultural homogeneity, but it'll probably be the cultural divide in politics that will put pressure on any sort of disintegration of the union. So that's an interesting irony, as I sort of popped up in my head as you were speaking then. Tone, I'm conscious of taking up any more of your time. We've been talking for an hour and a half, if you believe that. It's gone by so quickly, and you've been a fascinating guest, and I thank you so much for coming on. It's your first time, and I hope we do it sometime soon.
Yeah, no, thank you so much.
Really appreciate it. Thanks, mate. And thanks to everybody who has tuned in, and I'll see you next time. I appreciate it all. Bye.